Most energy contractors think insurance requirements are simply about satisfying contract obligations. The real issue is that many projects transfer liability in ways contractors do not fully understand until a claim, environmental incident, or subcontractor problem exposes the gap. And by then, the financial consequences are already unfolding. Energy projects create layered operational exposure, environmental liability, fleet exposure, subcontractor risk, contractual obligations, project-specific insurance requirements, excess liability exposure. The problem is not whether a contractor has insurance. The problem is whether the insurance structure actually aligns with the operational and contractual realities of the project. Most energy projects require general liability coverage, but sophisticated operators understand the real issue is not simply carrying a policy. It's whether the coverage structure satisfies additional insured requirements, primary and non-contributory wording, waivers of subrogation, and contractual indemnification obligations. One poorly structured contract can push major liability upstream. Environmental exposure is one of the largest hidden risks in energy operations. Many contractors assume pollution-related incidents are covered under standard liability policies. Often they are not. Fuel spills, chemical releases, contamination events, transportation-related pollution, gradual environmental exposure. These issues can create significant uninsured exposure if pollution liability coverage is not properly structured. This becomes especially important for environmental contractors, energy logistics operators, tank operations, field service contractors, and hazardous material transport. For oilfield trucking and energy logistics companies, fleet exposure is a major concern. Many energy contracts now impose strict insurance requirements involving commercial auto limits, hired and non-owned auto coverage, MCS endorsements, and excess liability requirements. Insurance carriers also heavily evaluate driver quality, fleet oversight, maintenance controls, and operational discipline. One severe accident can create catastrophic project exposure. Subcontractor compliance is another major issue. Sophisticated operators review certificates of insurance, policy endorsements, additional insured structures, and subcontractor coverage requirements before work begins. Many contractors discover too late that downstream parties carried inadequate coverage or failed to satisfy project requirements. Large energy projects often require significant umbrella or excess liability limits. This is because catastrophic claims involving environmental exposure, trucking losses, or multi-party incidents can escalate quickly beyond primary policy limits. Excess liability has become critical in protecting both project viability and long-term financial stability. Most insurance problems in energy projects are not discovered during contract negotiations. They are discovered after a claim tests the structure. If your operation is involved in energy services, environmental operations, oilfield trucking, infrastructure support, or industrial contracting, now is the time to review whether your insurance program actually aligns with your operational exposure and contractual obligations. Click the links in the description to learn more or schedule a consultation. Montridge Insurance Services specializes in helping energy contractors and industrial operators structure insurance programs around real-world operational exposure, not generic coverage templates. Thanks for watching.